Imagine walking into a bank. An ordinary day, an ordinary transaction. You sign a form and take out a loan. A few seconds later, a notification appears on your phone. There is money in your account. At that moment, most people feel relieved, because now they have money. But almost no one asks this question. Where did that money actually come from? Most of us think banks have giant vaults, banknotes, gold, reserves hidden behind thick walls, as if the bank were lending you someone else's money. But in the modern world, reality is very different. In today's monetary system, when banks give a loan, they do not distribute existing money. They create new money. Yes, you heard that right. Money comes into existence the moment a loan is issued. The instant you sign, a few numbers change on a computer screen, and at that moment, money that did not previously exist is born into the economy. This is not just a theory, it is the foundation of modern banking. Most of the money in the world is created not by central banks, but by commercial banks. Every loan means new money. So money does not exist first. Debt comes first. Money is the shadow of debt. At this point, the system becomes strange, because when you take a loan, not only is money created, a debt that must be repaid is also created. But there is a small detail here. The bank creates the principal, but the interest is not created, which means there is always missing money in the system. Think about it. If everyone tried to repay their debts at the same time, there would not be enough money in the world. Because paying the interest requires new loans to be created. That is why the economy must constantly grow. New debts keep old debts alive. The system is like a bicycle. The moment you stop pedaling, you fall. That is why governments want growth. Banks want to lend. Markets fear standing still. Because stopping means stopping money creation. And when money creation stops, the system runs out of breath. This is why economic crises occur. When people cannot borrow, new money is not created. Companies shrink. Unemployment rises. Markets panic. Because the modern economy does not truly run on money, it runs on trust. Everyone must believe that tomorrow will be bigger than today. But a deeper question emerges here. If money is born from debt, then what is freedom? From the moment we are born, we enter a system. Loans for housing. Loans for education. Loans to start a business. As life progresses, debt becomes normal. It even becomes a symbol of success. But the system's greatest secret is this. Debt exists not because it is bad, but because it is necessary. The modern world cannot function without debt. Roads, companies, governments, even salaries exist because future earnings are brought into the present. In reality, we are all spending the future. We use time that has not yet been earned. That is why money is not just a medium of exchange. It is also a system of promises. A promise. A promise that you will work in the future. And as long as billions of people believe in that promise at the same time, the system continues to function. But history has shown us one truth again and again. When trust breaks, money breaks too. Banks close. Markets collapse. And people realize something for the first time. Money is not a physical reality. It is a shared belief. The money in your pocket has value not because it is paper, but because everyone accepts it. And perhaps this is the most unsettling truth of the modern economy. Money exists not because it is real, but because we believe it is real. If one day people begin to question that belief, the system will change. But until that day, the world will keep turning. Banks will continue to issue loans. New money will be created. New debts will replace old debts. And without realizing it, we will keep living inside the same question. Does money create debt, or does debt create money? Don't forget to follow. Goodbye.